You are watching Khaos Crypto News, the crypto news that you need to know.
What's up, everybody? Welcome to Khaos Crypto News, the crypto news that you need to know. This is the greatest animated crypto news channel in the world. Today, we got some information regarding your crypto being at risk using 2FA. We're going to talk a little bit about Chainlink. We're going to talk a little bit about XRP and some NFTs and some meme coins. So let's jump right into it and let me tell you how you can protect yourself today. So right off the bat, your crypto and Bitcoin are at risk with a new Google Authenticator update. By far, the most widely used 2FA method is Google Authenticator. Hardly any crypto users are likely to be unfamiliar with the app. In an announcement released yesterday, Google released version 4.0 for iOS and Android, and the new version introduces cloud syncing. This means that crypto users will be able to sync Authenticator-generated verification codes with all Google accounts and devices and retrieve verification codes anytime the device is lost. In other words, the one-time codes are stored in the user's Google account and are no longer device-dependent. This is supposed to make it easier to sign in with Google Authenticator, which was released back in 2012. As Google writes, a key feedback over the years from users was that there was too much complexity in dealing with lost or stolen devices that had Google Authenticator installed. With the 4.0 update, Google introduces a more simplified solution to this problem. With this update, we're rolling out a solution to this problem, making one-time codes more durable by storing them safely in users' Google account. This change means that users are better protected from lockout and that services can rely on retaining access, increasing both convenience and security. However, blockchain security firm SlowMist points out in a tweet that this easier handling comes with greater risk. If users lose access to their email clients, for example, due to a hack, all access protected by Authenticator is at risk. If you use this backup method, the mailbox will be at risk. Once the mailbox permission is lost, the 2FA verification code may be stolen, which will bring huge risks. Please pay attention to the relevant risks. So definitely, it's not worth upgrading if you have the option. If you don't have the option, check out Authy, A-U-T-H-Y. It's another good option that uses cloud-based backups. That's my favorite one. Moving on. German state regulators begin privacy inquiry into ChatGPT. Now, where would we be without discussing ChatGPT? We want to know if data protection impact assessment has been carried out and if the data protection risks are under control. Other EU countries have also taken action. Italy banned ChatGPT over privacy concerns in late March. Italy said that it could lift the ban if OpenAI meets its requirements, such as the addition of age verification and updates to the platform's privacy policy. Obviously, privacy is the core issue regarding all this stuff. Moving on, we're going to talk a little bit about Arbitrum here. Arb will inevitably flip XRP, Aptos, and other assets. This analyst explains why. Analyst Jack Newald recently made a bold claim, stating that Arbitrum will inevitably flip prominent cryptocurrencies such as Hedera, Aptos, Stellar, ICP, ETC, Leo Token, Avalanche, and XRP. According to Newald, Arb provides investors with exposure to unliquidable leveraged ETH beta while outperforming other assets, especially during the current period of elevated Ethereum fees. However, not everyone in the crypto community agrees with this assessment. Some commentators argue that Arbitrum does not offer anything of substantial value to investors. Rather, it simply provides more affordable and convenient access to an existing network. Despite being a successful business model, especially given the current high fees on the Ethereum network, skeptics question whether Arb has the potential to surpass giants like XRP or Aptos. It's worth noting that XRP and Aptos are both attempting to offer unique value propositions to their users, unlike Arbitrum, which operates on top of an existing blockchain. XRP, for instance, aims to revolutionize cross-border payments, providing instant, low-cost, and secure transactions. Similarly, Aptos is focused on creating a scalable and decentralized infrastructure for Web3 applications. On the other hand, Arb is an Ethereum Layer 2 solution designed to enhance the performance of Ethereum network by providing faster, cheaper, and more scalable transactions. Let me know in the comments what you think. Do you think Arb is going to flip XRP and these other assets, or do you think XRP is going to take off and flip all these other assets by itself? Moving on, here's how Coinbase suing the SEC helps Ripple in its case. So Coinbase filed a lawsuit against the SEC in the U.S. Circuit Court today, which I'm sure you heard already, which has also been paramount importance to Ripple Labs in its legal battle against the agency. The lawsuit filed by Coinbase therefore simply asks the court to require the SEC to communicate its decision. We are simply requesting that the court order the SEC to respond at all, which they are legally obligated to do. In addition to the regulatory clarity that Coinbase's lawsuit could provide, it may also have a direct impact on the legal battle between Ripple and the SEC. As XRP community attorney John Deaton explained via Twitter, it's the second writ of mandamus filed in relation to crypto. I'm not sure what writ of mandamus is. I've never heard that. I'm going to have to check that out. I love the petition because I filed crypto's first writ of mandamus, which I sued the SEC, asking judge to order the SEC to do its job and amend the Ripple complaint to include only direct sales by Ripple. So we'll see what happens there. But in my opinion, Coinbase should just relist XRP. And in fact, it never should have got rid of XRP to begin with, simply because it's just more fuel to the fire on XRP's side, right? The way it's going now, Coinbase can kind of screw off, if you ask me. Anyway, let's talk a little bit about Chainlink. So Chainlink investors eyeing dip buying ahead of the hackathon. We'll talk a little bit about the hackathon in just a second here. Chainlink prices retraced 18% since reaching a new 2023 high of $860 on April 18th. On-chain data shows that Link has strong support around $7. Long-term holders have stopped selling ahead of the upcoming spring 2023 hackathon, but will it be enough to attract new network participants and trigger a sustained bull rally? Chainlink price has been in a freefall since the 18th of April, but according to data from Sentiment, long-term participants in the Chainlink ecosystem appeared to have stopped selling. This suggests that long-term network participants still have confidence in the Link token's long-term price prospects and utility despite the recent downtrend. Similarly, increased demand for Link relative to the current market supply is another signal of growing bullish momentum. Into the Block's exchange market depth chart shows that within the plus minus 30% range, the demand for Link nearly doubles the number of tokens put up for sale. The chart below shows investors have placed buy orders for nearly 3.39 million Link, while active sell orders currently sit at 1.7 million tokens. That should tell you something right there. Obviously, if there's more buy orders, the price is going to keep going up. So definitely not financial advice, but Chainlink is a solid project. Chainlink bulls that bought 105 million Link at an average price of $7 are expected to have enough in their tank to defend the 695 territory. But as things stand, a portion of the 32,500 addresses that bought 105 million Link at the maximum price of $7.13 could try to prevent the breakout. Once Link can breach that resistance, it could rally towards the previous year-to-date high of $863. However, the 67,000 holders that bought 89 million coins around that price zone could mount another roadblock. We'll just dig in here quick to the Chainlink Hackathon. You can check it out here. You can see it's in 2.5 days. You can register. There's opportunities. There's some prizes here. There's over 450K and growing in the prize pool. There's going to be expert developers, like-minded developers, and community members, and you're going to get written feedback on your hackathon project. So if this is up your alley and you're building something, definitely this is the place to go in a couple of days. Now we're going to talk a little bit about Ethereum. The fees are down 35% in the past week as the network activity cools. Shout out Reaper Liam, I see you, and Crypto Victo, boom. Ethereum transfer fees have declined by around 35% in the past week. According to data from the on-chain analytics firm Sentiment, the fees hit very high values when the asset's price plunged below the $2,000 level about a week ago. When a larger number of transactions are taking place at once, the mempool may get congested. During such times, a lot of transfers can get stuck in waiting as the network validators naturally prioritize transactions carrying high fees. Investors that want to get their transfers through faster then begin to attach a higher amount of fees with them. Other holders may then also try to outcompete these fees transactions by attaching even larger amounts, and so in this way the average fees can quickly blow up. This is only true when the mempool is congested, because when the blockchain is receiving little traffic, there isn't much incentive for investors to attach any significant amount of fees, since the network has enough capacity to handle all sorts of transactions quickly enough. That's one of the main reasons I don't like using Ethereum, is because of the fees are just insane. I'm sure many of you can agree. If you've ever tried to use Ethereum, you're like, you want me to pay how much to transfer this? Excuse me, when XRP is super cheap. Speaking of XRP, XRPL Accelerator Program launches, promising to boost blockchain entrepreneurs. The XRP Ledger community recently unveiled the XRPL Accelerator Program, a 12-week initiative tailored to support blockchain entrepreneurs building on the XRPL. Applications are open until May 1st, and the program aims to help businesses in the blockchain sector scale and achieve mass adoption. It offers a $50,000 grant, mentorship from industry leaders, and opportunities for startups to refine their product market fit and network with investors and partners. Having a product live on the XRPL is encouraged but not mandatory. To qualify, teams must pass a technical review and showcase strong technology, a compelling use case, and a hypothesis for market validation. They should also possess sufficient financial resources to sustain operations over time. The program seeks products with commercial potential that address a well-defined pain point or market need and could benefit from a revenue model and a go-to-market strategy. Pretty exciting stuff there. I'm liking to see all these launch pads all over the place. Top 5 cryptos to accumulate ahead of the bull market based on Best Owie, I guess is the writer's name of this article here. So we're just going to touch on them quick. Bitcoin, Ethereum, Litecoin, Dogecoin, and BNB. And for me, only one coin on this list is really interesting, and that's Litecoin, considering the halving's coming up in roughly 100 days or so, about August. So definitely something to watch there. We just talked about Ethereum. Bitcoin is great. It's definitely going to make some gains, but I'm a total degen. Dogecoin, totally too degen for me, though. And BNB, I had the opportunity to buy it when it was way cheaper, and I never did. And then it went up a whole bunch several years ago, and I was kind of like, meh, I would use it the odd time for swapping in and out of games on certain chains, for example, but otherwise, really not for me. Litecoin's the one to watch there, in my opinion. Now we're going to talk a little bit about NFTs and meme coins. So how this AI artist made $3 million as NFT markets fell. Guys, if you know how to do this kind of stuff, you got to let me know. Give me a bone here, because only hearing about this stuff later ain't helping. We need to get on this curve as it's happening. An AI intelligence artist, Botto, has made $3 million in revenue by automatically feeding prompts to an AI image generator and minting the image as an NFT. Now, it seems quite lazy to me, but it seems like they're not, well, we'll get into it. It seems like they're not using everything they generate. Botto, created by a German artist, reduces the effort needed by humans to develop creative prompts. According to Fortune, it can generate prompts by itself using the AI algorithm. The prompts are then fed into an AI image generator. Every week, Botto generates 4,000 to 8,000 images. Later, the members of the Botto DAO vote for their favorite artwork, which is then minted on the super rare marketplace. The votes also help to feed data into Botto's taste model to help it make it more recommendations that are agreeable to the community. The governance token Botto allows the DAO to consider the vote of community members. As of writing, the token is trading at 16 cents, down from about 95% from its all-time high of $3.72 in October of 2021. Generally, when you see these I don't want to call it AI, but essentially pre-programmed memes or NFTs that are just using a bunch of assets from a pool and putting stuff together, like Bored Apes, for example, it really doesn't jive with me. I like what these guys are doing. They're using a DAO to actually vote and consider which art is the best. If you're generating 4,000 to 8,000, which is what many people will do, and then just pop them into one NFT set, it's kind of like bleh, nobody cares. It's not interesting to me, at least. And I know many people are buying them, but I would never. In something like this, where they got 75 roughly out of, 8,000 images a week, that's pretty interesting. They're really taking the time to find out what's good, what the community likes, and where the future of this market is going. So definitely something pretty interesting. And also, it was $3.72 and it's 16 cents now. Not saying that past performance means future performance, but definitely something to look towards. I'm going to talk a little bit about the Pepe token here. It's been making news. Pepe's coin top bull has millions in Shiba, but holdings suggest risks for traders. No kidding. The largest Pepe coin holder, sitting on more than 1 million worth of the token, as the risk of too much of the coin in too few hands looms over the short-term future of the trending meme coin. Analysts have raised concerns about the behavior of investors who bought relatively large amounts of Pepe after its issuance on the Ethereum blockchain, turning about $1,200 of capital to over $9 million in just a few days. The frenzy surrounding the frog-themed token last week sent the coin's market cap of a few $1,000s to over $150 million and created massive hype, attracting liquidity from traders and spurring scores of lookalike tokens on other blockchains. Exit liquidity remains a concern. Data shows trading pools for Pepe's coin on DEXs hold less than 4 million in available liquidity. Trading volume for Pepe on centralized exchanges has ballooned to an average of 300 million daily, but market liquidity remains relatively thin, which may again cause a steep drop in prices should a large holder liquidate its holdings. And as we talked about yesterday, one holder is holding like most of the tokens. So yeah, be careful investing into any of these sketchy meme coins. Now, NFT traders are averaging 1,000 ETH losses per day. Blue chip NFT's floor price tanks. NFT holders are selling at losses. So returns on trade over the last 3 months showed that traders lost as much as 3,000 ETH on some days. This is a sharp contrast from what happened in the markets in 2021. At the time, NFT trade gains peaked in August 2021 when traders averaged profits of about 30,000 ETH daily. According to available data, the floor price of several NFT collections has significantly fallen from previous heights. For context, Bored Ape Yacht Club dropped 11.73% in the last 30 days to 51.2 ETH, a significant drop from the 77.9 ETH recorded mid-Feb. And the decline is even more important considering its peak floor price was 153.7 ETH around May of 2022. Another popular collection, CryptoPunks, has also dropped 18.27% to 49.9 ETH at the time of writing. You can't tell me that CryptoPunks is actually worth 49 ETH for that crappy, lazy art. That is just absolutely unbelievable. And look what we have developing on the XRPL. Just in our small Reaper ecosystem, we have some memes. I shouldn't even say memes, but NFTs that can easily turn into memes that are way better art, have a way better community behind them. And not only that, they have utility, unlike most of this garbage. Final story for today's episode. Napoleon Dynamite star John Heder to lead NFT animated series Space Junk. And this actually sounds like it might be a good ride. Following last year's launch of The Gimmicks with actress Mila Kunis, production studio Web3 animation studio Toonstar is back with Space Junk, another animated web series that uses NFTs to enable creative collaboration and participation. Now, I'm not totally in the loop of how the NFTs are helping. They could have made this show without the NFTs, and it probably still would have been just great. This time around, John Heder is attached as a voice actor. Space Junk is billed as a workplace comedy set among the stars, following the people tasked with cleaning up space debris left from other spacecraft. Workaholics co-creator Dominic Russo told Decrypt that the idea came from reading about and becoming lightly obsessed with creating a funny cartoon show around what is actually a real-world space hazard. So much of sci-fi is sexy and sleek, and everyone's got the perfect velour outfit with the perfect body in it. I don't think space is going to be like that. I think space is going to be blue-collar workers fixing stuff, and it's not going to be sexy as we think or want it to be. Definitely stay tuned for that. You're going to be able to mint the NFTs on the Theta network starting on May 15th. Each NFT is going to sell for about $20. And access to the show itself will not be token gated like that other show. Off the top of my head, I can't remember, but they have another show and you can only watch it if you hold one of like 5,000 NFTs. So it doesn't really make sense to me to limit your audience to only 5,000 people, but definitely something to check out, folks. Shout out Rosemary. Oh, thank you for always putting us up on the big screen. That pretty much wraps up today's episode as we are going on 20 minutes already. But I want to give you a big thanks, everybody, for tuning in. We're going to be doing these daily every morning as long as it's possible. Next weekend, the bush opens up, so weekends are going to be kind of out of commission for me. But I'm going to try to do as much as I can. If we're doing day rides and stuff, we're going to be doing an episode of Chaos Crypto News before we go out there. So definitely stay tuned. We got an episode of In the Chaosverse coming again this week with Patrick Riley. And we're going to try to get another interview in with one of our locals this week. So definitely stick around for that. Again, thank you everybody for watching. And we're going to catch you in the next one. Have a great day today.